Welcome again to the participants to another Disrupt digital event today on this beautiful Friday. Our topic today will be blockchain infrastructure for digital assets, and this is one of our pitch type of events. So every one of these 5 companies, Unbound Tech, Bitbond, Solaris, atpar, and METACO, will have 10 minutes to present their use case, their learnings, and some insights that you can take away from this call. As always, we have a WhatsApp chat that you can join now via this QR code or via the link in the email you just received to ask any questions, or if it happens, any technical issues that you want to get fixed, like maybe you can't hear one of the speakers or so, just post it all in there. But especially the questions. And then at the end of the session, we will go through the questions and each of the speakers can reply to them, depending on how much time we have. If we don't have that much time, don't worry. The speakers will also be in the chat, and they can keep this conversation going even after this very short event is over. That's it so far from my side, from the Disrupt side. I hope you enjoy the session, and we'll hand over now to Rebecca from Unbound.
Good morning, everyone. Thank you so much for taking the time to join this event. It's an absolute pleasure and honor to be with you today. Do you see the screen?
Yes.
Okay, so I've got 7 minutes. So let me dive in, just minimize the video. So my name is Rebecca Aspler. I'm leading the product line of the blockchain. It could be enterprise blockchain and it could be digital assets. We're a software company, an enterprise security type of company, and CASP, our product that is called CASP, is actually the crypto asset security platform. We're very much fortunate to have Yuda Lindell and Professor Nigel Smart as the co-founders of the company. As you may know, these are world-renowned cryptographers that are actually the ones to invest most of their time, most of their life actually, to professionalizing, I would say, the academic of MPC, multi-party computation. And since they were able in 2015 to very much shorten the time or the computation time of MPC from minutes long to millisecond long, this actually paved the road to the establishment of Unbound, because now it is not anymore, I would say, an academic type of discussion, but also a business type of application that could be applied. These are some of the customers that we're very much proud to serve. As you can see, many of them are actually enterprise type of customers, IBM, Visa, Jack Henry, McAfee, because we have 2 product lines. One is enterprise security and one is for the blockchain. And this is actually something we're very much proud of, because most of our customers are ones that are trusting, as you can see, our platform for the enterprise security, are getting it through their pen testing, peer reviewing the protocols and the software, and very much relying on Unbound to either sign their code, protect their softwares and keys. We're also the only company with FIPS level 2 certification, only software company for that matter. To be able to be certified for FIPS level 3, one has to be actual hardware, and this is not relevant for this case. And we're also very fortunate to have Gartner recognition for a cool vendor for the blockchain product line. So this is us in a nutshell. So why are we here? As everyone knows, with digital assets, the key is the asset. Unbound has started as an enterprise security company, as mentioned before, but because blockchain has so much challenges that are key related, it was just natural that we would expand our products into this area. Very interesting, and this would relate later on to the usage of HSMs. With blockchain, you don't just have to protect the key from actually reaching it, because the key usage is enough to steal all the assets. Pretty much like looking at a password, copying and pasting it and using it. So it isn't just protecting the key or keeping it locked somewhere, but also protecting the key from being misused. These are just some of the hacks. This is quite an old image, but as one can see, so much money has been stolen, mostly because of these types of threats. So it's either someone has been able to steal the key, could be outside attacks. Of course, it's a cumulative type of threat. Insider threats also, you know, those CEOs that suddenly disappear, or even have multiple employees sort of cooperate together to be able to steal money also has happened multiple times before, and of course, operational errors. So how does Unbound help organizations, I would say, address these threats? In the essence of the platform is the multi-party computation. It's a pure software approach, even though we can and we are using hardware when the customer needs so, let's say when the regulators insist on that. But at the heart of the solution, it's the ability to distribute the key into M shares or N shares, as you can see in this example 5. The key is actually generated as N random shares in a distributed manner. And it is never ever reunited, not a generation, not a usage. Each of the party has their own key. It doesn't matter which device it is. It could be, just as an example, iPhone, it could be an Android, it could be a server. It's hardware agnostic for that matter. And all cryptographic operations are being done in real time, in a asynchronous type of manner, meaning one can approve at a certain time and the other person can, or machine can approve at another time. So it's asynchronous and distributed, therefore adding another layer of security in addition to the multi-party computation itself. Now, getting into custody specifically, because this is the topic of today, custodians need very much to be safeguarding the assets of their customers in adherence to the regulator's requirement. So this is an example of a real-life approval policy, where today one would have to build such a policy using security approval rules, meaning if then, or creating some groups that would be defended or protected using application security rules. Such a policy cannot be created using multisig. It cannot be created using an HSM. And MPC is the perfect solution to be able to do so. You can see here is an example, a policy where you have, I think, 9 possible approvers, and you can see 5, if I'm not mistaken, the number is 1 out of 2, 1, etc., that need to approve. So you can have the customer on the external side, you can have compliance checkups built in proactively into the approval mechanism. You can have operations people, supervisor, and you can also have a third-party trustee. Just as an example, KPMG is a strategic partner of us. So this is another example of another factor that you can use in a policy that adheres to the segregation of authorities type of regulation, is multi-party, as you can see, and is of course protecting the key. Now, adding another layer, I would say, of sophistication, this is, as you can see, an example of an approval policy, but we're actually integrating very safely, securely, and in a manner that is relevant for the enterprises with other types of vendors to be able to give enterprises the type and the level of service that they're used to. So it could be nodes management, could be KYC, AML, etc., as you can see. We're also integrating with HSMs if one would like to keep a key share within an HSM or more than one key share. So HSMs could be built into the architecture as well. And we have METACO on the line. So I think this is a nice cooperation we're discussing these days, you know, giving the best of both worlds. So I'm assuming you've read the outline of the things that are written here. I just want to be respectful of everyone's time. So I'll move on. Another layer of sophistication is the ability to create those policies, if you can recall having those multiple key shares, but actually apply to risk-based policies, meaning in this example, you can see BTC automatic day trading, where you have only compliance, automatic checkups. You see AML machine and fraud management machine. And the policy in these cases, you can see, is 1 out of 2 in each group. So 4 possible and 2 out of 4. But as soon as you cross a certain amount of, let's say, an amount of Bitcoin, maybe it's nighttime, maybe it's the weekend, you can add a person, a human person, to review each and every transaction. And as mentioned before, this is all enabled using multi-party computation. So none of this is based on application security rules. Everything is cryptographically validated using only key shares. So this is, I would say, the strength of the platform. being able to also serve the regulatory requirement for air-gapped vaults, we have architecture possibility of creating two trusted systems, one aside by the other, where one would be air-gapped in a physical isolation. Two systems would be trusting each other, but the linkage between them would be such that transaction would start from a cold vault and only then move to a hot vault. So again, enjoying, I would say, everything that you need as custodians using MPC. This is just to, I would say, even get your minds going around the challenges and the alternatives, but obviously we don't have time to dive into this today. We believe that MPC is the future. We're not the only ones to say so. Gartner has said so itself. This is just the explanation of why, and I would be very much happy to take some questions later on offline. So this is the single key signature. This is where we have been for the last, I would say, 20 years. Multisig has been more popular in the last, I would say, 3 years, but it has its disadvantages. It's usually 2 out of 3, so you cannot build those very sophisticated policies. You have to custom develop it per ledger, and the longer time to process because everything is on-chain means higher fees, which may not be such an issue for a smaller, I would say, custodian, but becomes much of an issue when your operational fees are higher, when you have quite a lot of customers and investors to serve. MPC, regardless of Unbound, is much more sophisticated in the sense that it's cryptographically enforced. You can have more than 2 of 3 signers. You saw several examples. It applies to any assets. It's asset agnostic for that matter. It could be any quorum size, and you can easily replace approvers off-chain. They're not cryptographically.
Last
Yes.
30 seconds, yeah?
Yes, finishing. This is just to tease you guys. And this is actually good. It's just 30 seconds. These are the parameters and the alternatives out there. You can see the grade per parameter. And I would be very much happy to take later on type of questions and discussions to dive into the details. So it's been a pleasure. Thank you everyone for taking this early morning Friday time to meet with us.
Thanks a lot, Rebecca. Nice.
Thank you.
Okay, next up is Bitbond.
Hello, everybody.
Hi. Can you share the screen?
Great. Hello, everybody. It's a pleasure to be here today and to be talking about full stack tokenization technology, all you need to know. My name is Albrecht. I'm the founder and CEO of Bitbond. And today I would like to go through a quick introduction and then through key core components that we're building for our clients that we like to talk about as a full stack tokenization technology, which includes the asset tokenization, then digital asset custody, and stablecoin issuance, which we all believe are core parts of tokenization. So getting started with a quick introduction, at Bitbond, we have a core leadership team with people where we have a great experience, first of all, in financial services. Many of us have banking backgrounds. Like myself, I started my career at Deutsche Bank in London and then worked for Landberger strategy consultants, primarily also together with banks. And our other leadership team members also have mostly a banking or a technology background. Why do we care about tokenization? Well, today's securities are pretty messy from our standpoint. Issuing them involves a lot of intermediaries. Storing securities is an expensive process that many banks actually get out of. And transferring securities has a long settlement time and also involves a lot of intermediaries. And so the tokenized securities create a real advantage here because you have instant settlement, and that creates a lot of other advantages like virtually no settlement risk, and you can settle without a CSD, without a central securities depository, and it reduces the cost. And attached to that are also a few other advantages, as we're going to see. Now, digital assets are already a big thing today. Over the last 2 years, only the trading volume has gone up from $29–30 billion a day to now over 150 billion, and this is just cryptocurrencies. And what's going to happen over the next years is that many other assets will be tokenized. Right now, it's mainly starting with bonds, where we're primarily active, but over time, investment funds, equity, and other types of financial assets, such as real estate, will also be tokenized. There are estimates that there's assets worth of around about $24 trillion that over the next couple of years are going to be tokenized. So it's a huge market that we deeply care about. Now, at Bitbond, we're a pioneer in the tokenization space. Last year, we were in the fortunate situation to issue Germany's first security token offering with a BaFin-approved prospectus, and thereby we completely dematerialized a real security. And with that experience, we have become a trusted partner of banks and other intermediaries who purchase our tokenization and digital asset custody technology on a software as a service basis. And we normally work as a white label partner, so everything is customized towards the client's needs. And we work mainly with banks and financial intermediaries. Standard Chartered or von der Heydt Bank from Munich are two examples. Now, when we talk about the full stack tokenization technology, it's first of all asset tokenization, then digital asset custody, and stablecoin issuance. And throughout the presentation, I'm going through further details what exactly that means. And the reason we need these different components, because if you look at a securities issuance from an end-to-end process, then there are different building blocks that all can be improved and driven by technology. There is an admin panel for the bank or the intermediary, which sets up an offering and is taking orders, is doing investment allocation, and then is doing lifecycle management of the security. Then you have the investor perspective. Investors need to be onboarded. They need to have a way to store the tokens. And then there's also a business intelligence layer where the operator and then also the issuer normally needs to have certain analytics into such an offering. And we're capable of building this entire stack of technologies that are necessary. And in many cases, we have already done it. So let's dive deeper into the assets tokenization part. It consists primarily of an investor onboarding, which includes KYC check that we normally outsource to third parties who are specialized on that. It can include client suitability assessment. Then after the onboarding is done, there's a token creation and a token disbursement event into the custody solution of the investors. Then there's payment processing. Obviously, when someone subscribes to a security, whether it's retail or institutional investor, there needs to be some form of payment. And then after that comes lifecycle management with tax reporting, coupon or dividend payouts in order to basically bring the security through its lifetime. And what we normally do is, in most cases, we issue security tokens on top of the Stellar blockchain. In many cases, we see that there's a huge advantage of Stellar versus other protocols. In general, we are agnostic, and we are also open to using other protocols. In some cases, we do. However, if you look at straightforward instruments such as bonds, for example, then Stellar has huge advantages, such as it's extremely scalable. It normally doesn't suffer network congestion. Transfer fees are low, and the protocol itself is very simple and has smaller risks of being hacked, for example, such as a smart contract on Ethereum, which has been a big problem in the past. Now, how does the platform and the tokenization technology actually look like? I'm going to show a few screenshots. As an arranger or as a bank, you would log in. You can see all the assets that have already been facilitated through the technology. And when you look at one asset in particular as an example, then you see basic details about the instrument. You see a block explorer link to see the tokens on the blockchain. You can see the number of orders that came in. And so you can basically manage this security from here. And you can even create a term sheet, for example, from the data that you previously put in order to set up such a security. Then to look at an example from the investor onboarding side, you would normally have an account with the platform. We white label it. So for the demo purpose here, there's a Bitbond logo, but we could apply the styling and the logo of the client, of course. And then you go through several steps. I'm not going through all of them here for the sake of time. but normally there's a part where you put in your details, you go through the KYC check, and ultimately you verify your address and your email. At the final step, you would normally put in the investment amount and agree to the terms of the transaction. So these are just two glimpses into what the technology actually looks like from the side of the bank, of an administrator, and from the side of the investor. Now, when tokens are created, a crucial part, of course, is the custody of tokens. In general, tokens can be stored through self-custody, which some retail investors may do, but in the case of institutional investors, custody services are extremely important. And custody, in our view, is one great way to actually get into the digital asset business. In Germany, as we all may know, custody has become a regulated financial service since the beginning of this year, and many banks have started to get involved. And with the help of our technology, they can get started really, really quickly because we provide the technology on a white label basis. Custody is a pretty complex topic. So on the key management side, we work together with third parties. We apply a method that's called multi-party computation for the key management, where we work together with a company that's called Curve. And we can deliver the custody technology either within a front end that we deliver, which is white labeled to the client, or in some cases, we also deliver it purely as an API so that the digital asset custody wallet can be integrated into an existing online banking infrastructure, which is something that also many of our clients actually demand. And this is just a screenshot how this can look like. So basically, you have a deposit function, a withdrawal function, and we can even integrate a secondary trading functionality through the Stellar decentralized exchange. The SDEX, as it's called, is one other advantage of the Stellar protocol. And now the final part of the presentation is the stablecoin issuance, where we believe that if you want to have a true and instant delivery versus payment mechanism, a stablecoin is necessary so that the payment can happen on the same protocol, on the same chain as the token issuance. And for some banks, we're already creating the technology so that they can issue stablecoins and allow them to also take the payments part in-house and avoiding the need of a paying agent. And on this table, you can see kind of the advantages that you have versus a conventional asset with conventional payments. The second step would be you have a digital asset, a tokenized asset, and still conventional payments, and kind of the final and highest level of sophistication of using the technology where you have both a digital asset and on-chain payments, where you bring down costs to an extremely low level and where you bring down counterparty risks to basically zero and have everything automated and instant. And one case study, one example where we're doing all of this is Bankhaus Vonderheit as an example. Bankhaus Vonderheit is using our tokenization technology for securitizations that they do. They use our digital asset custody technology, so they are a custodian for their investors, and they use a stablecoin that they issue themselves with our technology in order to bring the payments part on chain as well. So that's it from my end, and thanks a lot, and I'm looking forward to a discussion later on.
Thanks a lot. Wow, nice. All right. Now it's Solaris. Alexis from Solaris. All right. I'll give you a sign like this for 3 minutes left, okay? So you can plan ahead.
Great. Good morning. Very happy to be here. Thanks for everybody. Let me share my screen very quickly. Can you see my screen?
Yes, we can.
Perfect. So let me get started. So yeah, my name is Alexis, Managing Director at Solaris Digital Asset. And today I'm going to speak about how to launch digital asset services in Europe. So for the one who don't know Solaris Digital Asset, we are the subsidiary of Solaris Bank, which focus in expanding our product offering into the crypto space. So Solaris Bank, it's a tech company with a full banking license. So we are really well established in the German market with more than 80 plus partnership already in the fintech space or with financial institution. And why we say a tech company with a banking license, because I think this is something which is quite important for us, is we are 300 people, but half of the team are engineers. So really there is a strong focus on the tech side. So it's not a traditional bank on our side. And what we offer on the product offering is clearly a full banking platform, but also a digital asset platform and help you with our API to build your own services. So we are a fully white label service that you can integrate. And we also provide the fully regulatory empowerment for you to launch the services faster. So being in the ecosystem now, I think for like a little bit more than 2 years on our side, we've seen a lot of like great project developing. We have helped a lot the ecosystem as well to move forward. Because 2 years ago, when we started addressing the crypto and digital asset market, what we realized is a lot of companies were struggling to find strong banking partner. So crypto and blockchain company were a bit struggling here with banking services. And from that, we acquired a lot of successful partnership from crypto neobank, exchanges, or STO platform. And what we have identified so far is there's 3 main segments in the digital asset market, starting with cryptocurrency, for example, Bitcoin, but also tokenization of financial assets, what Radko just presented with Bitbond, where you can tokenize debt, real estate, equity, also regular currency with stablecoin. But also we see a lot of interesting projects around next generation of assets, where you can tokenize data, governance, or gamification. So we are kind of like very bullish on the space as a whole, and we expect a lot of people and company to launch really cool services in the future. And we think this will really transform financial services as a whole. So now our mission for us is really to drive digital asset adoption by abstracting complexity for our partner to launch these services. Because what you might face actually when you want to get started, or even if you're currently operating any type of crypto or digital asset services, there's a lot of complex requirement to get started. With 3 main pain points, I will say. The first one is on the security side. So we've seen also a great presentation from Unbound showing the pain point on the security side. And when it comes to crypto and to blockchain, security is key, and it can be very difficult for companies that want to get started to manage that. You probably don't have the team or the expertise, or also the necessary operation for you to maintain that. The second part, I think, which is key and coming to the point on how to launch in the European market, is regulation. So when it comes to the exchange of value, it's often a very regulated market. And I would say there's as much engineering on the technology side than there is on the regulatory side to manage. So as you know, in Europe now, to be a custodian or wallet provider, you have to comply with the Hamel D5 directive. So therefore you are an obliged entity, and you need to KYC your user, for example, and need to do some monitoring on the transaction, which can be like quite complex to manage. As Radko mentioned as well, for the Bitbond presentation, there is as well a license requirement in Germany now to be able to operate that business, which is also, not everybody want to be their own bank. So last but not least, the technology part. This is also a technology which is quite new, blockchain technology, and therefore it might be a bit complex for some people to develop the entire stack from scratch, or also to manage the integration with multiple providers. Because what we've experienced on our hand is there is not really a complete infrastructure that help you at the moment to launch easily services, and you have to, in the background, integrate with multiple components. So yes, custody, for example, is one key part, but also potentially, for example, if you are an STO platform or if you are a crypto exchange, you also want to process fiat currency in the background, so euro, for example. And then for that, you need to integrate your KYC with these 2 providers, which can become quite complex and have a long time, a long time of integration on your side. So that's why we have developed a complete and trusted digital asset platform, which is fully API-based, white label, and it's modular as well. So you can pick different components to build your own services. So we offer our banking APIs and enable you to process euro, for example. And then we also offer our custody API, which enable you to process crypto. And the beauty of that platform is we really abstract all the complexity for you, and will enable you to have a fast time to market. So on the security side, we have, I would say, one of the best platforms in the market when it comes to security. As mentioned, as a tech company with a banking platform, we already have a very secure platform initially on the banking side. And on top of that, we have been adding additional security layer to make the platform even more secure on the crypto side. And last but not least, the regulatory empowerment. So I think this is really something which is unique to Solaris, is we have a full banking license. So therefore, that means that we can do a lot of interesting use case. And one of the great partner we are working with, for example, is Bitbond. They have built an entire crypto neobank on top of our platform where you can buy and sell cryptocurrency, but also store your assets, or also have a full bank account with a debit card on their side. So we empower this type of use case. And I think this is really unique in the market to be able to process Euro on one hand and also crypto on the other side. So I was just mentioning, we really want to abstract complexity for you as a partner for your integration, but also for your end user, because we truly believe to achieve our goal of driving digital asset adoption, we need to be able to empower our partner to create outstanding user experience. And this means that when we really design our API, we really think for the end user as well to really create instant and convenient experiences. And last but not least, working with a fully regulated bank in the background can bring a lot of trust. So for example, when it comes to retail user, in the past, there've been a lot of scam in the crypto space. So you really want to be sure that you have a trusted partner and who is best, positioned and a fully regulated German bank to do so. I think we are quite in a good position there. So exactly what I mentioned, we have a one-stop shop platform. We can help you, if you don't have a license and you don't want to go for your own license, we can provide our tech stack for you, which will enable you to have the full regulatory empowerment to move forward, and which will enable you to have a faster time to market. So we are more than happy to discuss, any type of partnership on our side, and to look at empowering the ecosystem for innovative use case in the crypto space.
Thanks a lot, Alexis. All right, yeah. If you have any questions, just post them in the chat and we will go over them later on. Next up is Michael from atpar. Welcome, Michael. Please share your screen.
Okay. Can you hear me and see my presentation?
Yes, wonderful.
Okay.
All right.
Cool. One moment. Okay, let's start. Hi, everybody. My name is Michael Svoboda. I'm the co-founder and CEO of atpar from Switzerland. We are an infrastructure provider that empowers financial institutions and fintechs to offer tokenized financial products at scale. So our target customer usually already have custody in place or dealing with crypto asset and now want to take it one step further. So let's look at the opportunity at hand. So today's public markets are already very efficient. Systems have been built and optimized for years, but these capital market tools are generally only accessible to large corporates and service providers. So there is a gap in private markets. Transactions in these smaller niche markets are costly, less efficient, and assets are illiquid. So we believe that digital and blockchain-enabled solutions can bridge this gap and bring these capabilities to private markets and these players. We as atpar want to help to unlock these untapped markets by providing a crucial piece of infrastructure to make these private market transactions simple, fast, and more efficient. So how do we do that? So our target clients and customers are building these multi-product origination platforms and marketplaces. So these are end-to-end solutions to tokenize SME loans, mini bonds, asset-backed securities, funds, and so on. And of course, they want to reduce the number of intermediaries needed for these private market transactions, make it more efficient. Yet somebody has to perform the tasks and the functionality has to be somewhere. So there it is where we come into place. We provide them with the tools for their solution to perform as much of the financial life cycle of their products on their own or automatically. We provide them with managed asset services And our financial middleware simplifies the issuance, servicing, and reporting of these tokenized financial instruments for a variety of financial products. So it's like an open blockchain-enabled core banking. These solutions can plug into it. What are the benefits on the originator side? First of all, they have a faster and cheaper go-to-market because they can leverage the functionality. They can automate their back office and really simplify the integration into the existing systems they usually have and broaden their product shelf at a lower cost. But I think it's not only about the originator. We often talk about how we tokenize things, how we put them out there, but it's also on the other side. We need to provide the tools for the investors to onboard tokens faster and make it less painful to service and report on these assets. So on this side, we really want to help to make a faster due diligence and minimize the reconciliations also on the investor side to, at the end, help you also to sell your assets, make more attractive products and marketplaces. So what are these services exactly? For our product, we have managed services for banking grade instruments. And our solution consists of 3 parts. We have at the bottom, the open financial backend. So that's a smart contract framework representing and managing financial contracts on chain. So these are self-sufficient, self-enforcing financial contracts we run there. Then we have we call it the product factory, the product itself. There, so it's a templating approach which offers you all major financial instruments in a parameterizable templates that are out of the box there. So you don't need to reinvent them. And then the third part is the middleware layer that gives you the convenience of the APIs. And also, as Solaris mentioned, there's a lot of complexity involved there. So we want to really take care of that and give you the convenience. So for these platforms and originators, we support them in the financial life cycle from issuance to redemption. In the issuance part, we have our product factory. So that's the templating approach that lets you create almost all kinds of financial instruments with a push of a button. So you don't need to code, test, and then audit each kind of new financial instruments to launch it. So it's all already there. In the servicing part, we really help you to simplify the servicing lifecycle. So we take care of the record keeping, calculating agent functionalities, figuring out accruals, dividends, and so on, and also supporting you with paying agent functionalities to distribute funds. So we are really mainly focused in financial products that have these kind of financial cash flows and complexities you will have then downstreams once you have issued that, and we take care of that. And also for the reporting, we make your reporting life easier by providing you the data and logic to display and create comprehensive views for your investors' portfolio and assets. And of course, we help to create the relevant reports. So for example, by aggregating the tax relevant cash flows out of these instruments. And we make sure that you have a perfect audit trail on chain. So what we do in essence, we reduce the manufacturing cost for these players by an order of magnitude and enable them to automate their back office. How do we do that? So I think the key part is really that we make these tokens smart that are out there and investable. What do I mean with that? What we see today is often are empty tokens. They're tokens, they are perfectly used for the trading life cycle. But what the token really represents, the term sheets, the logic behind it, is usually off-chain somewhere else. So our superpower is really to put these things in the token or attach it to the token, the data, the business logic, and then package it in a container. So there are three benefits. So we want to make tokens that investors understand and trust. We know the know your product part, by simplifying the due diligence with our standardized term sheets that are there for all players in the token. We create tokens that player can process and automate. So we really want to provide these built-in functionalities all the players need to derive payment obligations and all the events of a financial instrument. So nobody has to replicate the data and logic again. And we make the tokens easy to integrate for other systems. That's with the containerization we do. So it's really like plug and play capabilities. All our financial products have the same interfaces and the same data model. So that leaves you with really little hassle in terms of reconciliation. So as our tokens have data and logic embedded, this really reduces the complexity for all players. And we are convinced that this lays the foundation for the tokenization of financial products at scale. And what I mean with that, I mean, the situation today, as I see, is that we have a lot of handcrafted tokens in siloed solution, and every token creates additional friction for players and their system along the value chain. So we think this simply will not scale, will create huge integration and reconciliation costs, and slow down the adoption. So we are really looking to make, now that we have the opportunity to build this new infrastructure, build it really in a scalable way. But we need to have a way to add these products without adding additional friction. So with our containerized assets, we enable to achieve exactly that. And with this approach, we can free up the assets information and flow of information seamlessly between systems and players. So what we want to do is really industrialize the management of financial assets and replicate the productivity benefits of shipping containers for the financial value chain, and empower the small and medium challengers to create efficient private markets. How is the usual setup look like with our clients? So they're building the solution up there. They have existing systems. And in the middle, as you know, they need players, often best of breed approach for the compliance part, security token solution, taking care of know your client, transfer restriction. We provide the product part, you need the custody. Who are our clienteles that plug into our infrastructure? Crypto banks for their tokenized offerings of SME loans and other stuff. New tokenization platforms targeting asset-backed securities, certificates, existing lending solutions that want to tap into secondary market or refinance their loan book, and also core banking providers that want to provide these capabilities and benefits. And where do we stand? So we have this infrastructure up and running, doing first POCs, and plan to go live with our pilot client in Q3 and Q4.
Please come to an end soon, yeah?
Huh?
Please come to an end soon.
Yes. So if you want to know more, there's more information. And please contact me if you want to find out how we can leverage our capabilities to tap into these private markets. Thanks.
All right. Thanks a lot, Michael. Now our final speaker is Seamus from METACO.
Good morning, everybody. My name is Seamus Donoghue. I'm from METACO. I'm the VP of Sales and Business Development. And in the context of the topic today, we work primarily with banks who want to give some insights on the journey that they face when they look to get into this asset classes and some of the key considerations. And we can touch on later as well as what we do as METACO to help that journey. We're a Swiss-based company. We're a financial technology software company based in Switzerland, but in the French side of Switzerland. You can see in that photo there is the port side of Lausanne and Lake Leman. I've been around since 2015. And our focus has really been focused on working primarily with banks and helping them integrate digital assets into their core infrastructure and provide solutions to support that. I think, listening to all the conversations today, there's very little discussion about, if this asset class is coming of age. I think very much now we have, as recently as this past week, we've had Paul Tudor Jones, one of the legends in the hedge fund space, say that he's hedging his portfolio with Bitcoin. I think clearly the ambition is this space is very nascent and early, but I think now even the most conservative banks we speak to are looking to get involved. And that's a big change even from just last year when we really were focused on early adopters in the space. I think everybody realizes this is the future and they need to be prepared. So when they look at basically building or deciding to build something in digital assets, I think the key consideration the banks typically have is, as in any profit-driven firm, is they need to build a business case. And that business case, although they may have a long-term view about tokenization, that space still needs to mature. Obviously, things like payment tokens with the emergence of Libra, stable coins, etc., are evolving very rapidly, and there's potentially immediate use cases. But tokenized securities and other potential alternative assets, it's still early. There's and the banks are looking at that from an ambition perspective. But when they build their business case, it's really about what exists now and what their clients are potentially asking for, and what they can actually establish a business that starts earning revenue now. So really, most of the business cases we've had from our clients have been focused on crypto. And the crypto is fairly narrow subset given their AML concerns. They're really focused on Bitcoin and Ethereum, ERC20 tokens, much larger universe. And really, other currencies really drop off there. There's some interest in XRP, but less than you would imagine, given it's supposed to be a banking product. Some emerging tokens are starting to get some traction, like Tezos. But really, the core business case is really built around Bitcoin and Ethereum so far. Now, how they start is really driven by what in this space are they allowed to do. So regulation, very much along what Alexis spoke about earlier, is a key consideration, and really it's a big focus of what goes ahead. So for jurisdictions where they have very, let's say, progressive regulators, Germany is a good example with BaFin, Switzerland, FINMA, MAS, and Singapore. The roadmap is very well defined for the banks. There's no gray to operate in. Banks, since the global credit crisis, when they basically got slammed with fines for mis-selling and everything else, gray is not an area they like to operate in anymore. So if there's a clear roadmap, what we see is banks typically are building to go straight into production. In other jurisdictions, in the US, I think is a good example where where regulation is less clear. There's multiple regulators. They're not necessarily aligned. Banks typically are talking POCs, but what's clear is they want capability that when there is regulatory clarity, they can basically launch a business. So we see a lot more experimentation there and less production, but definitely the knowledge base is building very rapidly. And the journey then evolves once they build a business case. It's really around, there's obviously a lot of strong digitally first or native custodians in the space that have built very large businesses. So the bank's first question is typically, should they externalize or should they look at self-custody and manage this themselves? Now, core to that discussion is custody itself a core offering? If they are a custodian, then clearly I think the first choice is probably self-custody. But what we found is some of those that are custodians have also looked to externalize this to start with and maybe view that as a learning journey. Typically, they will hit basically issues around, primarily around flexibility in terms of the controls. A lot of the banks being highly regulated firms typically have fairly complex risk frameworks that they need to implement, and these often aren't supported by custodians in the market. And the other thing is basically the scalability of costs. So what we have seen over the past couple of years is a compression in custody fees that are able to be charged to end clients. So you need to be able to respond on the cost side as well. And if you externalize custody, in many ways, your hands are tied rather. So once they've decided, let's say, to go down the self-custody route, if that's the case, and obviously easier thing for a large firm to decide, but we're seeing smaller firms decide that as well, given the maturity of some of the technology solutions in the market, they then will decide whether they should build this themselves or basically work with a third party. And I think, as Alexis alluded to, it's quite complex often to build this yourself. And unless you're a tech firm first, it's a very difficult thing to maintain the talent and technical know-how. So we see very few firms actually building the technology themselves, but instead then look for the trusted third party. And just in terms of a couple of key features, a couple of things when they look at the technology stack, I mean, I'll probably reemphasize these, but they need basically a framework that can support whatever comes in the future. And many banks particularly are not convinced whether it's going to be public or permission. So they definitely look at infrastructure to manage both. And safekeeping is one element, but I think there's a couple other things, whether it's a full sort of control frame or programmable sort of workflow environment, which Unbound touched on earlier in terms of managing basic complex workflows, or also an ecosystem, as Alexis has pointed out, obviously key. So once they've decided to build this space, the specifics they look at are really basically something that covers all the potential use cases they have for clients. I mean, we work with some banks that are basically launching exchanges and they need a cold storage solution. So that's one thing, but then they may have future plans that evolves into HUT. So typically what clients will want is basically a solution that can uniformly cover all the use cases. And again, going back to whether it's basically a bank being concerned about permission ledgers, which one will dominate in the future, or which new currencies are coming, it needs to be one, ledger agnostic, and two, it needs to be able to easily implement what may come down the road in the future, because this is obviously moving quickly. We had a bank yesterday we were speaking to was convinced about basically the permission ledgers of the future, but they're also convinced that the ones that exist are not the future. So no matter what, they need to basically integrate potential new protocols as they come along. Can't understate basically the idea around governance as well. You need to be able not just keep the keys secure, but keep the governance, how they're used, who uses them, and when, also equally secure. Within that context as well, we've seen some discussion around tokenization. This is kind of tied to your programmable governance. How you manage smart contracts should also be something that's integrated into the system. It's not just about managing keys of dedicated assets, but managing all the permissions and governance around things like tokenization, who can mint, who can burn. And then as these tokenized assets evolve or tokenized securities evolve, managing all the corporate actions of the life cycle of the asset are also critical things that need to have defined governance. Now, we've also spoken, API first bank, as Solaris pointed out, it's critical that banks can apply their own layers on top of this. Standalone solutions just don't work for the banking community. And they also need to integrate into what are often very old legacy infrastructure. Typically, the core banking systems we're looking at are 20+ years old. Some of them historically haven't even had APIs. Some of them never accommodated more than maybe 3 or 4 decimals. So these are key things that need to be overcome. All clients don't necessarily need the same sort of deployment. Some are very comfortable fully managing their own stack. Others looking for managed services, and a solution needs to accommodate those different clients, or otherwise you narrow the subset of clients you can address. Insurance is a critical issue, whether it's via the partner or basically because the technology itself is understood by the insurance market and is insurable, critical. And as also has been alluded to in a number of other previous discussions, the full stack is critical here. Basically, it's not just banks don't want to have to shop around for everything. They want to know that basically there's an ecosystem of integrated partners covering all the required services they're looking at. So let me touch a bit on what Silo does. Silo is effectively an institutional digital operating system designed primarily for banks. And the idea here is basically it is not just a custody solution, but we do support basically all the potential use cases around wallets. We are, in terms of hot and cold, it's a holistic solution. We are not a hardware company, we're a software company, but we partner with third-party hardware providers. Our clients are primarily banks, and what we see typically from banks and often regulators is they're most comfortable with hardware security because they've known it for a long time. It is still the trusted solution in the banking community. Core to that as well, though, is an entitlement system. And I think Unbound spoke about this. And I think the criticism that often hardware companies don't have very flexible entitlements is true. I think often they rely on things that are fairly simple around multi-sig. We at METACO have worked very closely with our clients to basically address that. And we have what is a very highly adaptable entitlement system also built into the hardware. So this is cryptographically enforced, so end-to-end secure, and it enables any sort of workflow to be defined in the system, whether that's risk-based processes, any logic the bank may need. So the key point is they can implement all their security and risk and control frameworks into any sort of action on the platform and configure any sort of authorization they require. We support multi-tenancy and that delegating that sort of programmable entitlements to their clients. And again, a tokenization engine is built in. We support EVM, so we have basically all the methods that you want to support there. Basically, you can provide customizable governance around those. So integrate with other tokenization engines, similar to what atpar described earlier. And effectively, we work with a wide support of ledgers and also a whole ecosystem of partners for all the services the banks require. So that actually brings me to the end of the summary. But thanks very much for the time. If anybody would like to find out more, please reach out. We work with all types of banks right now globally. We also have a couple of clients in BaFin regulated clients in Germany. We work with legacy exchanges that have launched digital solutions and technology companies that have banking licenses in Germany, as well as MAS regulated banks and FINMA regulated banks. We're a Swiss company, but we have a global footprint and very committed to the German market as well. So we'd love to hear from you if you'd like to find out more. Thank you. And apologize for my technical glitches.
No worries, no worries. Yeah, thanks, Seamus. All right, thanks a lot to all the speakers for your time and for your insights. I think we only have 2 minutes left, so just jump into the questions. One for Rebecca. What happens if one or more of the distributed hardware devices for storing parts of the private key is lost?
Just unmuted myself and open up the camera. So there are easy ways to replace key shares. Key shares are being refreshed in a continuous manner. So if one would lose their key, the customer would simply deactivate it as soon as possible. Regardless of that, there are cryptographically validated ways to create a distributed policy where one would never ever have the ability to approve a transaction alone. This is best practices and cryptographically validated. This is very short answer.
Yeah. Well, we only have very short time.
Yeah, exactly.
If there are any further questions, just write them in the WhatsApp chat. Other than that, regarding the speakers, would you like to share your PowerPoint presentations?
Yes, of course.
Okay, then I'll send you the link to the WhatsApp group once again if you haven't joined yet, because there were quite a few people asking for the pitch deck so they can inform themselves better. Yeah, all right, that's it from my side actually. So as always, stay tuned, follow us on LinkedIn and Twitter to get updates. And thanks a lot to the speakers for their time and presentations. I hope to see you again as well very soon. Have a good day.